give me a sense of what it's like to be fishing as a venture capitalist in the big waters of Africa?
Africa is full of problems to be solved, right? There's no scarcity of problem solving, right?
Yeah.
So much pent-up demand across all sectors,
every
right?
day.
The question is, right? Absolutely, right? The question is, can we find the right founder that is curious? Can we find the right founder that is in love with the problem that he's solving?
To get into the GSB, the main essay is what matters most to you and why, and my response to that was to empower African entrepreneurs.
So we're a bit contrarian there, that we genuinely think that talent is distributed and capital is not. And another anecdote to that is Yassir, which is another business we backed in Algeria, out of all places, right? This business serves today 8 million customers, 6 markets. They got a successful Series B led by a very prominent VC firm. So you're getting real founders now that are building, right? And the valuations become also much better, right? So that's why we believe this is the best vintage.
On the return side, I mean, yes, we want to see a clear upside, but once you have authenticity and like velocity, typically like returns follow. You know, in Africa, when you take a step back, it's mostly like Nigeria, Egypt, South Africa, Kenya. And so I would argue that
plus Ghana.
Plus Ghana.
Plus Ghana. Like
right.
A little plus.
Yeah.
Yeah, and I was going to ask, is Morocco in this next wave?
We feel like Morocco is definitely at an inflection point right now.
And shuttling back and forth between the US and Africa, I've noticed, inflection points that are very similar to other geographies I've seen before, like India or LATAM. We're seeing more repats coming back to the continent to build.
So my grandparents came about 80 years ago and started building businesses on the continent. And I think I witnessed from a young age how tough it was to build businesses on the continent, but also how fulfilling and impactful it can become of a journey.
I've always had this soft spot for the continent. I think, it just has so much demand, and I think this is going to be the growth engine for the world in the next few decades.
Hello, and welcome to the Lucidity Insights podcast, The Perfect Pitch. I'm Erica Welch, and I am so excited today because I have an African-focused venture capital fund sitting in front of me, 2 managing partners, Mikael, who goes by Mika, Hajar. Nice to have you.
Thank you.
And we also have Hisham Halbouni, managing partner. Very exciting. This is the first time I'm also doing a podcast with 2 against 1, right? So I'm kind of excited to see the dynamic of this.
Let's see how it goes.
I'm also super excited about this conversation because, Mika, you have that sort of entrepreneurial operator background. We were at the Stanford GSB. We crossed paths a little bit. But at one time, I saw that you had interned at Waymo. You did a little stint with Neo Investments in China. So it's kind of interesting. I want to tap into what made you come and start P1 Ventures. And Hisham, you have that investment banker resume, nice and clean. So I want to talk a little bit into that as well. And I think together that makes quite a powerful duo as you guys lead P1 Ventures. So let me start here. Mika, after Stanford, you were like, I'm going to start a venture capital fund. It was right on the verge of COVID, I think. How did you get here? How did P1 Ventures happen?
So to be fair, if we roll back the clock, that's literally what I wrote in my GSB essay on what matters most to me and why.
To get into the GSB? To
get into the GSB, the main essay is what matters most to you and why. And my response to that was to empower African entrepreneurs. So I grew up surrounded with African entrepreneurs, being from Lebanese origin. And so my grandparents came about 80 years ago and started building businesses on the continent. And I think I witnessed from a young age how tough it was to build businesses on the continent, but also how fulfilling and impactful it can become of a journey.
And you grew up in Lagos?
Mauritania. So I'm born in, Okay. So I'm now living in Lagos, and we have family on the ground there. This family is scattered across West Africa, mostly Francophone.
Okay.
Historically, it was Abidjan in Ivory Coast, where I think you may have still the largest population of Lebanese diaspora in Africa. And then it was in Senegal and Mauritania, where I grew up.
Okay.
Yeah.
Okay.
So it was always the dream. The plan was to like have some experience in venture capital at like a big shop, like an Index or an Excel, and then eventually start my own. And I think COVID just reprioritized everything.
Interesting. And why did you want to start a venture capital fund versus become an operator yourself?
So I'm an engineer and I'm an operator. For the first like 7-8 years of my experience, I think I was mostly like building businesses. I had a good 360 overview on like what sales, what quality, what product really meant. And I think that equipped me to start like a venture capital like role. And that's what I applied to the GSP. And during COVID, there was this opportunity. The why now became very clear. And instead of like joining a bigger shop and eventually starting my own, I was like, look, I'm going to kick off this like proof of concept fund. Worst case, I'll back 20 incredible founders. I'll learn a bunch. And then maybe I'm going to start my own thing. That was sort of like the worst case scenario. And
pretty good worst case scenario.
Yeah. And the more energy and time I put into it, the more I met incredible people like Hisham, and I felt compelled to like scale this up and institutionalize it.
Okay. And so your first pilot fund was how large?
We were shy of like 13 million or so,
okay.
With a bunch of co-invests structured through SPVs, and we invested in 24 companies, including a few that raised follow-on rounds like Series A, Series B, closing Series C. So it's been fun. Yeah.
Interesting. Okay, Hisham, the evil banker across from me, right? Don't worry. It's so interesting because in this region there are so many, right? On the venture capital side, it was the investment bankers that flipped over and said, "Oh, I want to do riskier venture capital," because it's the cool kid on the block. I'm interested in your story. So you started out at EFG Hermes. Tell us the sort of Coles Notes version of what made you get excited about venture capital, and specifically venture capital in Africa, which I think is a very different beast.
Sure. So I started off as a banker at EFG, spent about maybe 13 years there. And I was fortunate enough, to again be promoted through the ranks and be able to actually tasked with some market launches, right? So started, part of the team that launched the Saudi business, investment banking business for the firm, did the first transaction for them in sub-Saharan Africa and Kenya, came to Dubai to kind of co-lead the office here. And so starting those markets from scratch in some cases, right, gave me a lot of appreciation to how difficult it is actually to crack a market, to build a team, to what's the edge, what's the calling card, how do you actually crack it. So it's like, other than sort of doing deals and, being the evil banker.
That's okay, I used to be an evil strategy consultant. So
I'm trying to wipe my sins now on going on the other side. But so doing that gave me a lot of appreciation for that, how difficult it is, and a bit more of a growth mindset. It's like, okay, let's expand, let's grow, how we can do that. And I did not know what venture was back then, right? So it wasn't sort of, a plan to eventually end up, doing venture. It's when I moved to Man Capital in 2015, I moved to Man Capital to join as a partner there. And there we started investing significantly and aggressively globally in early stage and late stage tech businesses, right? Direct on the cap table. And then over time, we start anchoring funds and doing, early stage investments in the US mostly.
And Man Capital is a private equity mostly fund out of London.
So Man Capital is a very well structured family office, more akin to an investment arm of a global conglomerate.
Okay.
All right.
Is it part of Man Trucks? That's separate.
No, that's separate.
Okay.
No, that's
for a moment, because earlier you were saying they're in heavy machinery. I thought, man, is that this?
No, they distribute. They're the largest distributors of Caterpillar, probably globally.
Yeah.
GM, cars, and it's quite a large conglomerate, F&B and many other sectors. And they operate across 12 African countries.
Okay.
So the second part of the mandate was launching businesses from scratch in Nigeria, in Kenya, in Egypt. So we spent, past 9 years or so doing that. Investing in tech, high growth companies in the US, launching greenfields on the continent, and shuttling back and forth between the US and Africa. I've noticed, inflection points that are very similar to other geographies I've seen before, like India or LATAM. Okay, we're seeing more repats coming back to the continent to build, right? The idea of actually, starting a venture funded business, getting, the ecosystem started to grow. Okay, this is very interesting. So started cutting, angel checks, and this is where Mika and I crossed paths. We started co-investing together. Really, I always had this soft spot for the continent. I think, it just has so much demand, and I think this is going to be the growth engine for the world in the next few decades. And spending more time there is like, okay, look, there is absolutely something happening there. And then you start getting those early signs of, the first unicorn, the second unicorn. So that's more validation. Then you have those, the ecosystem starts, kicking off. You have teams that spin out from a success story. If he can do this, I can also do that, right? It becomes aspirational. And that got me to actually team up with Mika to launch our first institutional fund, which is the fund we're currently investing from today.
And this institutional fund, how large is it?
So today we're still fundraising and deploying at the same time. Today we're at almost $40 million.
Okay. And your aspiration is to reach what?
Minimum viable fund for us for a seed stage fund, especially in this environment, right, was $30 million, right? $50 million is sort of our hard cap.
Yeah.
So anywhere in between works. So we're in a good spot.
It's a good size fund for an Africa fund.
Absolutely.
Yeah.
It was a very humbling experience as well. Fundraising in this environment is obviously challenging, but we're very thankful and grateful, obviously, for all the investors that
have come on board
absolutely.
And supported you. And so let's talk a little bit about this. I also want to double click on that, because this idea that first time founders and startups that come in front of venture capitalists, they don't understand that venture capitalists are also fundraising all the time. Absolutely. And they have to really sell that, and they have to deliver something to their investors. And I'm really of the belief that until all startup founders who are starting their fundraising journey understand the business model of the venture capital model, like what is the VC trying to get out of every investment, then until then, startups really don't understand, or founders will not understand how they can be that right fit. How would you explain that to a founder and say, hey, listen, these are the investors that we have. This is the sort of returns that we are expecting from our portfolio. We don't expect everyone to make it, but everyone needs to expect that they're going to return this kind of multiple. How do you have that conversation?
Do we really? I feel like we spend more time discussing about the founders' vision. I think for us, there are really 2 or 3 things that is important is how authentic is the founder to the problem he's solving. That's the why him or why her, actually. So that's something we spend a lot of time understanding. Did this person build some pattern recognition? Did they experience the pain point? Why is this relevant? So authenticity, really. And then velocity is another one we spend a lot of time on. The last thing we want is to back a business where we feel execution becomes difficult, and at each board meeting we discuss the same topics over and over again. And that's the beauty about technology, and what Hisham was alluding to is that when there is so much pent-up demand, that if you're addressing a real need, it can accelerate. So those are 2 things I feel we spend the most time on. And then on the return side, yes, we want to see a clear upside, but once you have authenticity and velocity, typically returns follow.
Yeah,
I would argue.
Yeah, I agree with that. We focus really on the founders and the founders' ability. Markets, and people always underestimate the markets and underestimate the power of the founder to actually create new markets and expand their market, right? So markets are important for us. again, Africa is full of problems to be solved, right? There's no
Right.
scarcity of problem solving, right?
Yeah.
So much pent up demand across all
Multiplying
sectors,
every
right?
day.
The question is, right? Absolutely, right? The
Yeah.
question is, can we find the right founder that is curious? Can we find the right founder that is in love with the problem that he's solving? Again, building a business requires a lot of resilience. It's a very long journey. So people the founders and the entrepreneurs need to really believe in the mission that they're executing on. They need to really focus on customer experience and how can I get the customers to fall in love with my product, whether it's a B2B, whether it's a B2C. And, resilience, early signs of, successes before, or at least attempts, shots on goal. Like people that are, they're hustling, they're scrappy, they're trying, right? So these are the things that we really look for in the founder. And for the returns, look, what we tell founders is we run a fairly concentrated book as opposed to your typical US seed fund, right? So seed fund in the US would be 50, 60 portfolio companies. We actually, believe in smaller concentrated positions. So maybe this fund will have shy of 20 portfolio companies. So we spend a lot of time because once we make a decision, we're all in, we're committed, and we're backing you in this long-term journey. And they need to understand that, VC is, and we don't really spend time on it, but this is how we think about it. VC is a power law business, right? This is not a normal distribution type returns. So we really need to find outstanding entrepreneurs, the best of the best on the continent, because with power law you'll only have a few that will return the fund, right? And many times over, and a few or many that won't, right? So we spend a lot of time on these things, and from the beginning we tell the founders, like, these are the metrics, this is what excellence look like in your line of work, right? If you hit those metrics, we will double down on you. If you're not, we'll obviously help you and we'll see how we go, but at least the expectations are set early on.
Okay, fair enough. I mean, that's what every early stage investor says, right? More than, of course, you have to have the right product. There has to be fit. There has to be the market for it and the potentiality for it to become a unicorn or something close, let's say. But at the end of the day, it's about the founder. How resilient are they? How communicative are they? How transparent are they with us? So give me a few examples. You guys have made enough investments now in Africa. What would be, can you give me a few examples that would surprise me, or give examples of, hey, there was this guy, and if I can find 10 more guys like him, I would back him tomorrow?
Yeah, of course. No, I think, look, as early as 2020, we backed a gentleman in Morocco, of all markets. So definitely not one of the big five. In Africa, when you take a step back, it's mostly like Nigeria, Egypt, South Africa, Kenya. And so I would argue that...
Plus Ghana.
Plus Ghana.
It's like
right.
A little plus.
Yeah.
Yeah, and I was going to ask, is Morocco in this next wave?
We feel like Morocco is definitely at an inflection point right now. And yeah, so this specific founder we met with, Ismail, he was on his 4th or 5th venture. So serial entrepreneur, had a couple of first success. soft landing, nothing major, but he was definitely this time around swinging for the fences and trying to get a major outcome. And yeah, it's been, I think, one of the very first, if not the first, Moroccan company that went through the Y Combinator, YC.
Oh, interesting. Can you say the company?
Yeah, Sherry. CHARI. I think they went through summer 2021, if I'm not mistaken.
Okay.
They became the first startup in Morocco that crossed $100 million valuation.
Okay.
And it's the first of many things, huh?
Yeah,
I think they were the first startup that secured the PSP license in Morocco, which is quite a feat given, historically how much of a banking oligopoly it's been. And yeah, I think they're almost in the process of acquiring a bank now. So it's
wow.
It's a very inspiring journey, because when we first met Ismail, if I'm not mistaken, he was barely familiar with Y Combinator. So it was it demonstrates, I think, a lot about the founder's growth mindset. And to Hisham's point, if you have resilience, if you have authenticity, if you have velocity, then it's just a matter of sequencing it and de-risking over time the growth milestones.
And is it give me a sense of what it's like to be fishing as a venture capitalist in the big waters of Africa. Is it that there's actually a lot of these opportunities out there, they just have to be found? Or is it that you're really having to hunt through a lot of, let's say, mediocre stuff to find those golden nuggets, but they're there? Like, give us a feeling.
That's a great question. Look, we also have a firm belief, and we're a bit contrarian there, that we genuinely think that talent is distributed and capital is not. Right.
Ooh, dig into that.
Yeah.
Talent is distributed, but capital is not.
Absolutely.
Like evenly distributed.
Not necessarily evenly, but it is distributed more than people would think. Right? And that's why we're focusing on the continent. Otherwise, you just go where the capital density is, the talent density, where most people think talent density is in the Bay Area, right? So
right.
And another anecdote to that is Yassir, which is another business we backed in Algeria, out of all places, right? This business serves today 8 million customers, 6 markets. They got a successful Series B led by a very prominent VC firm, Bond Capital, Mary Maker's Fund. So again, we spend a lot of time on looking for those founders. We spend a lot of time on what are those characteristics we're looking for. We've even developed our own, or developing in the process and building it up, our own data science tool, where we're constantly scraping, for certain types of founders in certain markets and doing that on a regular basis. So the market is evolving. It's still at the early innings, obviously. But yeah, look, there was a lot of noise pre-2021. Money was flowing freely, zero interest rate environment. That was fantastic. Everyone was out there. Everyone's raising. Yeah. Let me give it a shot, right?
Big party.
Absolutely, right?
Yeah.
The beauty of what's happening today, and that's why we think today is just a really good time for us, is first of all, a lot of the noise just got out because people okay, it's not easy to raise money. I'm gonna go back for my, getting a 9-to-5 job or doing something, actually more secure, right? So now you have more of real founders that are actually resilient and are willing to go through the painful process of fundraising and really being scrappy and spending the time actually on what is a business model, what is unit economics, so on and so forth. So you're getting real founders now that are building, right? And the valuations become also much better, right? So that's why we believe this is the best vintage, or one of the best vintages can happen in general. So the sample pool of potential founders shrunk, and it's become a bit more higher quality. Repeat founders also that actually were either successful, got a soft landing, or even failed, right? With a lot of learnings, right?
Yeah.
That we're looking actually at a couple of them right now that failed from our previous sort of investments, and we're thinking of backing them now because we think they actually took stock of what happened, they internalized it, and they're going to swing for the fences for the second time.
What a beautiful message, actually, that I think a lot of people need to hear. That we talk about this a lot at the GSB, but like fail early, fail often. But I think in this region, it hasn't really permeated our ethos yet of like, it's okay to fail, and actually it's how you present. So how are these guys presenting their failures, where you guys are looking at it going, this is money, this is a good backing?
No, absolutely. When you have, again, great founders are very self-aware of, what happened. They reflect a lot, right? They take stock of the mistakes and they come back. It's like, okay, look, we're going to come back more resilient. We knew what happened. Some of them actually put down their own post-mortem, right? It's like, okay, this is why this died, and this is why the next one is not going to die for those reasons. And we really support, people should embrace the failure. As you said, right, you take that the GSB classes, but in our part of the world, failure is still, being shamed.
Yeah.
So it's very important, and it's a strong message we send to folks. And I think once we back a few of those, the message will even be stronger, right? It's like, it's not about failing, right? You're gonna take, many swings. As long as you have the right mindset, you are learning, you are going to evolve. Eventually, you're gonna get there. So.
Do you guys have someone in your portfolio that you can give an example that, like, okay, this guy had this guy had a couple of failures or one failure back then, and he's swinging for the fences now, doing really well?
We were talking about Nurdin. His first startup out when he left Intel, I don't think was a success. I think it was like an acqui-hire. So he was building for the second time around. And this is someone who was like an engineering lead at Intel. Like he had a team. and a PhD in electrical engineering from Stanford. So it's someone who is highly accomplished, worked at like a Fortune 500, who built for the first time around, didn't do so well, clearly had a chip on his shoulder, and for the second time around was building back home on like a bit more of a like proven model, right? So it was, when you think about it, repeat founder, proven model, you're really de-risking. Like it's all about execution at this point. And yeah, no, he's it's inspiring. I mean, he started more as ride-hailing, and he transformed the business completely. Like more than 3/4 or 2/3 of the business is now like food delivery, groceries delivery.
What's the startup?
Yes Here.
Yes Here.
Yeah.
Okay. Yeah.
No, it's impressive. Same thing as Smile. I mean, it's he was clearly on a mission. COVID also like impacted quite a bit the business trajectory, but yeah, it's a mix of skill and like luck, but it's the outcome is inspiring.
Okay. Now, there's a lot of, I'm finding there's a lot of interest for, I don't know exactly why, but there is a lot of interest specifically about backing African founders and African startups. I think we're also starting to enter this interesting age where there are angel investors coming out of everywhere. They're like Canadians and South Americans and everyone, and they're just like, what market can I invest into? And there's a lot of interest actually in Africa. Whether they're actually, you know, writing the check, you're going to that level is another question. But in terms of them digesting, I was mentioning to you guys before we started filming today that one of our most highly downloaded reports was a report on the future of fintech in Africa. And it was downloaded globally. It was just, everyone was just interested in like, okay, is the future of fintech in Africa? And so I'm curious if you can paint more of a picture about, what is investing like in Africa? What's the founder landscape? Like what we hear is, you know, infrastructure is a little bit behind, regulatory issues, economies are unstable. Of course, you hear all of these disaster stories, right? And that is just really, really challenging. And we've said, you know, Hisham, you're Egyptian. We've also said this about Egypt for years, that Egypt develops amazing entrepreneurs because they have to be resilient, because Egypt goes through a massive churn every 5 years or so. And it seems like the rest of Africa sort of follows suit, but maybe with even more volatility. And there seems to be this big conversation around Nigeria, South Africa, and Egypt basically produce over half of the GDP for the entire continent. So of course, a lot of the investment and the entrepreneurs sort of seem to stem from there. But then there's all this talk about the +2 of Kenya and then a little bit from Ghana. I'm curious if you guys really do believe that talent is distributed, which by the way, I do too. As you were saying that, I was thinking, gosh, yes, absolutely. I think it is. I think, though, that talent might be moving to countries or markets or locations where they think they'll have a better chance at access to capital or access to infrastructure where they can build. And so maybe it's not necessarily, let's say, Kenyans that are building in Kenya, but there might be, you know, entrepreneurs from across the continent that are doing that. But I wonder if both of you guys can paint this picture of, this is what it looked like a few years ago. This is where it's shifting to. You know, these are the markets that obviously we were investing in before, but now we're seeing little hubs pop up here, there, and what sort of sectors are you investing in that might be of surprise to investors from abroad, that they're like, really? You can invest in that there? Yeah,
I think we have a good title for your next report, actually, that may be even more downloaded than fintech. I'll bet you the future of AI in Africa is going to be an exciting one for your audience. And I would argue, like in the first proof of concept fund and like through our angel investments, we've done a lot in fintech. And obviously, when you take a step back, like fintech seems like an obvious one, right? It's, you know, over 1 billion people on the continent, vastly underbanked, mobile first, very low trust environment. And so that yields itself to like trying like different type of products rather than like, you know, going to like the traditional like banking channels. And yeah, so like fintech has a lot going for it, right? And when you take a step back, Hisham was talking about like the first few unicorns on the continent. Most of them are fintechs. So,
yeah, I think when we did the report last year, it was like 6 or 7 out of the 9 unicorns on the continent were fintech.
You have so much pent up demand. I mean, 1.3 billion people. I don't know how many of them are bankable, right? But you take a billion people that are bankable on the continent, even 800 million, right? They are 70% of those are under or unbanked completely, right? So you have a lot of pent up demand.
Yeah.
Massive pent up demand, right? They don't have access to the basic financial needs, right? Cost to serve was extremely high because I need to open a bank branch to go meet them. And it's ridiculous, right? We're just looking at statistic. Access Bank, for example, has 700 branches. Today you look at, I don't know, Money Point or one of the other sort of, POS. I mean, they have 30,000 points of sale, right?
Yeah.
So the proliferation of that, meeting the consumer where he's at a fraction of the cost, really changed that. And that's why you will find, fintech will continue to be a very important sector.
Absolutely.
On the continent. But what's happening as well is, and to Mika's point, is there are also inflection points that are happening on the technology side as well globally, right? And Africa is a net beneficiary of that. So let's take stable coins and bitcoins, for example, right? So this is, that did not exist, 10 years ago at that scale, right? But there is a true use case for stable coins on the continent, right? Remittances, cross-border payment, it's instant, it's a fraction of the cost. And it is a true store of value. Back to the point you mentioned, which is, economies are struggling or are volatile. They will continue to be volatile for a very long time. So you cannot underwrite a scenario where, the continent, on the macro side is going to be great. It's going to take time to get there, right? But meanwhile, right, there are a lot of use cases. There are a lot of pent-up demand. There's a lot of... The growth is massive and exponential that it will wipe away some of the economy's sins, if you shall, in terms of devaluation and what have you. Right? So that's maybe one inflection point, which is the stable coins and the whole proliferation of the crypto. And again, we talked about regulators being a bit less progressive, but you know what? We have now, regulations in South Africa for crypto. You're coming in Nigeria as well. We have a sandbox now, and this is only the beginning. Right? Maybe we can shift to AI, for example, and the adoption of that. Mika, maybe you can.
Yeah, absolutely. I mean, I think globally, it's hard to argue like it's not the biggest platform shift, right? I mean, since mobile, since cloud, I think a lot of investors have been spending a lot of time in AI. And we believe like it's the same thing as like this leapfrog thesis for fintech. It's like you are talking about, because again, the pain points are so like real. Like necessity is the mother of invention in a sense, right? Like it's just, you have to address those needs. And the best way to do it is to make it more efficient, automate the tasks. And to some extent, policymakers are enabling it. There is no licensing as much, right? And that's the beauty of it, because often those needs are somewhat universal. And so what we believe is even more powerful in like AI native like businesses is that you can now have export first businesses. So you start addressing a local or regional need, and pretty quickly you start expanding it globally.
But when it comes to startup founders in, I hate using the term like the African continent because it's just so huge. And it's just perpetuating this wrong image, right?
Countries, yeah,
but yeah, exactly. But let's just take Nigeria, for example. I mean, Nigeria is probably one of the best cases for this, and Egypt as well. But one of the biggest questions we get from outside is there enough tech talent in Africa, native to Africa, that can actually develop this next layer? Are you seeing this level of talent and even going into more deep tech, machine learning sort of engineers coming out of the continent?
Yeah, I think without hesitating, for sure. I think even when you look at globally, like some of the category defining like SaaS businesses, I'm thinking, businesses like Aura Solar, actually that came out of the GSB, I think a year or two before us. Sam Daly is Nigerian. Beyond the Stanford, epiphenomenon, someone like Topia Watona, Calendly, right? Like he's born and raised in Nigeria, bootstrapped his way to like $1 billion like business. So yeah, no, I think and the list goes on. I mean, you have today more African unicorn founders in like tech outside of Africa than in Africa. And our whole thesis is that this is going to change because you have 1 billion people back home. They just weren't afforded with the same opportunities because capital is scarce. And so we want to enable them to make a dent globally. I think that's the underlying... So
you're saying up until now, there's been a bit of a brain drain where the top African entrepreneurs are leaving the continent, setting up shop somewhere close to where they can find funding or where they can find the talent.
Yeah.
And you're thinking in the next decade, we're going to see the shift where all of these African expats that have gone abroad to study will come home and start building businesses back home?
100%. We call AI the greatest equalizer. Today, you can start a business in Casablanca, Alger, Accra, Lusaka, you pick your city. And if, again, you have this strong authenticity, resilience, and velocity, you can get there.
Yeah.
I mean, if you take a step back, right? So we are seeing repats, but there's also still a brain drain that's happening, right? So let's also be very realistic, right? This is going to take time. We're still at the early days. There are many challenges, but you have those founders that are back, that are building, and they are as good as any founder globally. And with the adoption of some co-pilots and AI-enabled solutions, right? You really don't need to have, let's take, for example, DevOps, right? So this is highly technical. There's a dearth of DevOps engineers globally, right? Just supply demand, right? Let alone on the continent, right? So we're seeing solutions in this case, right? We backed a business and hopefully we're closing something very soon that is actually enabling, right, regular software engineers, right, through a one-click solution, deploy their software safely, securely, right, at a fraction of the cost, right, without having to recruit DevOps engineers on the continent, right? So therefore, you're getting a lot of velocity and you're getting a lot of automation happening at a fraction of the cost, solving for the dearth of certain tech talent on the continent.
Yeah. Yeah. No, it's an interesting as well because one of the, I'm already forgetting, but I think it was 9 unicorns that we covered last year. And one of those unicorns, I'm forgetting the name of the company, but it was the only fintech, it was an HR solution. And the HR solution was that they would recruit all of these tech dev teams. You remember? Andela. And they changed their business model at some point, but essentially they set up offices in New York because who was buying that tech talent? I mean, maybe for the D&I quotient in the US that has been blowing up, but it was Fortune 500 companies in the US and the tech, ecosystem saying, yeah, we should have some African talent on our teams. And they're a unicorn. I was reading their story and going, wow, I would never have predicted that business model would have been one of Africa's first unicorns.
Yeah. We actually backed 2 ex-Andelen in our portfolio in the second fund. Yeah. It's to your point, success breeds success. So once you have first outcomes like this, people are more equipped and they're building for the second time around with a lot of lessons learned accumulated from their previous experience. So it's a very exciting time.
And as you said, right, is what's happening? Why is now actually Africa's so now because Andela is created, for example, right? So you have a lot of very strong engineering talent on the continent, by the way. Nigeria, Egypt, South Africa, Kenya have very strong schools, technical schools, right? And that's why a lot of the Fortune 500 companies are also employing on sort of, freelance or on specific jobs.
Yeah, a lot of people don't know this, but South Africa, Egypt as well. I'm not as familiar with Kenya, but these are hubs for Fortune 500 companies to have tech centers and dev centers.
Absolutely. And so we backed a business, for example, Rainis, right, which actually one of the founders was in Andela, right, and he first witnessed this problem firsthand. So now he gets recruited by a Fortune 500 company. Now for him to get paid back home, right, it takes him 2 to 3 weeks to get his money, right? Just because of the payment infrastructure is not working, right? Is not, the rates are not there, right? And then he pays he loses almost up to 25-30% on FX exchange. Now Reynes does this now, his solution, right? And this is why we like those guys that have witnessed the problem firsthand, so they really understand the core of the problem, right? So what they do is they actually now bank those freelancers. So you get paid now if you're on the Reynes platform, you get paid instantly. You don't wait for 3 weeks, and you get charged whatever 3 to 4% on FX. So it's meaningfully different to what it was, right? So my point is as the infrastructure layers and certain solutions start being rolled out, you'll find this layers kind of so now you're getting deeper into the market, right? So the market is not just connecting people, the Uber of this of that, and the copycat models. That's great. That's wave one. I think now we're wave 2, wave 3 in terms of the depth of some of those markets.
And you're getting really customized, localized, deeper understanding startups that are addressing pain points that are not being addressed anywhere else.
Absolutely.
Interesting. Okay. I also wanted to touch on this. Yeah, we've been talking about African unicorns. I mean, they've made a lot of waves over the last few years, but also some of it has been negative. I mean, some of them have exited, IPO'd. Jumia is just one example of many, though. And during the last few years, some of these fintechs have just seemingly imploded, gone from unicorn status to what's going on there? Because there is this image then that, okay, you can build a company, you can really build it up, but maybe only in times when there's free-flowing money. Or is there something else going on here where there's massive layoffs during this time after they've reached that unicorn status? There's this question of are these companies really exitable from your standpoint if they were to IPO? What are your thoughts on that? Honestly, honest thoughts in the moment.
Look, I mean, I can take a quick stab at this. I mean, valuations and businesses and operations, I think, and exits they're three different. They overlap, right? But they're three distinct things, right? So I wouldn't say necessarily are imploding, right? Maybe some of them are having specific issues, but sound business models are sound business models. If they have good unit economics, good cash conversion, that stays intact. Now, the issue that you have with the continent is you don't have an exchange, or a unified exchange at least, right, where it can become a home to all those companies, right? So what happens is they list on the NASDAQ, right? Great, you get an exit, right? But then becomes an orphan stock, right? So you're asking a research analyst, sitting in the US to, report on whatever, an African company. So, right, there's no retail buy-in. Public markets is a different beast, right? So people really they can't resonate to what Jumia is, or a Fowry is, or that, right, in those international markets. And then you have the local markets, which proved actually to be a great exit opportunity for some of the local players. So Fowry is a good example, right? Fowry, until now, look at the numbers, right? This is a very strong, financially sound business, right? Now,
if it's a local IPO, it seems to be doing relatively okay.
Absolutely.
Yeah,
right.
But it's this idea of that there isn't that avenue for many of them, so then they do export themselves to the US or the LSE or maybe even Hong Kong. I haven't seen too many of those. And who's going to invest in that?
So unless you're a truly global business, right, it becomes very difficult to have an international listing, right?
Yeah.
The story doesn't resonate. People can't understand the risk-reward profile well because it's not well articulated or followed, right? If you have local listings, you do great, right? But then you have that kind of upside capped at certain times because the economies fluctuate, and then you get the overhang of what's happening on the Egyptian stock market or what happens in the Egyptian economy overall, even though the business might be outperforming. Right? So you can look, okay, maybe you do local listing with GDRs on the London Stock Exchange, ADRs on the US Stock Exchange. You can get all creative, but most exits have been, right, so far, strategic acquisitions. And these are strategic businesses, global businesses. So think Stripe acquiring a Paystack, for example. Right? Yeah. And that's where most of the founders are kind of thinking that would be the route. Unless you are in one of the big 3 or 4 economies where you can actually have a local listing, that would be your natural exit path.
Yeah. What's interesting is that, a lot of the success stories actually, like Paystack, for example, they were not quite close to being, they were very much on their way to being a unicorn. But of course, Stripe made the intelligent decision to buy them before that. And so they kind of get lost in this discussion. We did give them this honorable mention that it kind of opened the gateways in 2020 to be like, hey, they're really investable companies in Africa. But then, they're owned by Stripe and not really, they're not in the conversation or in the field anymore, really, when people are talking about, oh, who's the next unicorn, Okay, let's talk about you guys. P1 Ventures, you've just, you're continuing to raise this fund. How many, in this newest fund, how many companies have you already...
We're closing on a 10th one, actually.
10th one, okay.
So almost halfway through the portfolio construction.
Yeah. Wow, okay. And tell people out there who are like, hey, I'm an African founder. I'm interested in these guys. What do you guys invest in? What's your average check size? How do you guys work? What are you guys looking for? What are the sectors?
So the way we approach things is, again, like team, market, product, very much in that order. So I think ideally we want to see a strong team with some like entrepreneurial experience, some technical depth, and back to what we were saying, authenticity, velocity, resilience, right? So this is on the team side of things. On the market, as Hisham was saying, it's often like the most underestimated by investors. Ideally, we'd like to see a first few paying customers. So call it a few $1,000s of like monthly revenue. It doesn't have to be huge, but I think it helps us validate. And in our diligence process, we're very customer centric. So we'd like to engage with the first few pilot enterprise customers, understand the adoption cycle, the pain point, what was the substitute, like what led them to discover this product. So that is also important to us. And then the last bit is the product. Scalability, reliability, how quickly like the roadmap has been able to be executed, features released. So this is high level how we think about it. Team, market, product in that order. So if you have a strong team, if you on average we back people that are like 10 employees ish, that make, let's say, $5,000 of like revenue monthly, with some like growth trajectory, and that are like that built the first MVP and that have a clear like roadmap on how to scale this up.
And when you said, when you were referring to customers, it sounded like you were referring to enterprise customers. Are you more focused on sort of B2B business models than B2C, or no preference?
No preference, yet we've been skewing toward more B2B so far. I think on the consumer side, like we have a few success stories like Yasir, where we had sufficient proof points. I think when we first like partnered with Nurdin, he definitely had a few 100,000s or 100,000+ of like monthly actives. So as Hisham was mentioning earlier, like he's got 8 million now. So it clearly there has been a lot of growth, but I think with consumer, we're just, it's a little more complex of like a validation, demand validation process. Exactly.
The bar is higher, I think.
And it sounds like for some of these founders, you guys have had your like finger on them for a little while before you really partnered, and I assume that's sort of normal in the pre-seed seed stage. You guys are on already lucidityiinsights.com. You've got your profile there. If there's a great pitch that was submitted to you guys through the platform, tell us how you guys work. How long is that cycle of you guys getting to know the founder, the team, and this process do you normally take?
It can go pretty fast.
I mean, I'd say 2 months. right? More or less.
Okay.
Can go faster, can go longer, depending on what we're
stage
discussing.
they're
Oh
in.
yeah, but yeah, I think 2 months is usually, door to door. Many cases we even have relationships with folks earlier, and we stay in touch. Right, it's just too early for us. Maybe we keep having that. And I think all founders should think like they're always fundraising. They always need to think of us as pipeline as well, right? So, okay, if you have a good conversation with a VC firm, right, just keep them updated. Don't bombard them, but on a quarterly basis, have a call every quarter, every 6 months.
FYI, here's what we're doing.
Absolutely.
Here's some new features.
Absolutely.
Here's some awesome things we're up to, or asking for advice.
And an entrepreneur is always fundraising, right? I mean, some of them are technical; they're not very comfortable with it, but they need to build that muscle because you're always selling, right? You're always selling to founders, to customers, to VCs, to employees. So they need to keep that fundraising pipeline on all the time. The way we invest, we typically write a first check and we save $1 for $1 for follow-on investments.
Okay.
We're very clear with our founders once we sit down and once we have a path to Series A document. We sit down with them, and that covers a lot of things.
Okay.
It's an extensive document, and this sets the path of where we want to be and where we should be together. And it's not dictated by us; it's together jointly. And then we track how that goes for us to whether write the second follow-on check or not.
Okay. And it sounds like you guys are sector agnostic.
Yeah.
What's really exciting you right now? What are some sectors that you're like, we just love this right now?
That's a good one.
I think there are different use cases of AI where we've been very enthusiastic about. I think we've so DevOps I think is one that's almost like infrastructure. I would call it mid-layer. We've done verticalized AI, so in anything like health, travel, retail. And there are many others where we've been thinking about it. You were talking about HR tech. That's one big need. Education, that's another huge sector. So those are a couple that are definitely close to top of mind, top of heart, where we'd like to back founders.
Okay.
Can tell you what we don't want.
Yeah.
Right.
Sometimes it's just as important to know what you don't want.
It's easier, right? Yeah. I mean, we don't want defensive founders that are not flexible to keep an open mindset, right? Seriously, right? You have to have the flexibility, especially at the early days, right? You have to be mission driven and everything, but you need to demonstrate, the flexibility and have the mental plasticity to be able to, you will zig and zag so many times. So you need to be open to that sort of coachability. We don't necessarily, it's not a no, but it's something we kind of raise a higher bar for solo founders.
I just had this on my last podcast. It raised a lot of
we like some solo founders are phenomenal, right?
Yeah.
Nuruddin is a solo founder, right? But for us, it's just a higher bar. What we don't like are capital intensive businesses, right? Even though we understand that some of the infrastructure might not be there, right, and it might be necessary, it's great, could be a great investment, but highly unlikely to be a fund returner given the stage we invest in as well. We look for venture returns. This is really outsized returns, right? So we need it to be as capital efficient as possible, least amount of dilution, high growth, high margin, high cash conversion. And software has been something we're spending more time on. And because the next generation of software is AI enabled, right? I think the path to revenue is much faster than it used to be before. The adoption on the continent was very slow previously on SaaS in general. And I think that's going to significantly change because it does not only impact cost efficiency, but also significantly productivity. So that's an area we're very keen on as well.
Very interesting. Okay. As we come up to the end here, we've got to give the audience what they always want to come here for, which is a quick fire round for both of you. Okay. Try and answer these in sort of 30 seconds or less. Number one, to you personally, subjectively, what makes a perfect pitch? What needs to be in there?
Authenticity.
Boom.
Yeah. I mean, we need to find really the founder understands and has a unique insight into the problem he's solving.
Unique insight into the problem he's solving. Yeah.
Right? That's on the problem itself. And what are the inflection points that are happening around him outside the problem itself that's going to get him to ride a higher wave. Right? He's on a boat, right? We need to know that he really knows the boat that he's driving, what kind of boat he's building, right? But then the waves that are going to carry that boat is equally important.
I love that analogy. Basically, he needs to be a captain of his ship, and he wants to get into the storm and ride it until it's, high sky in the air.
Yeah.
Interesting. I love that analogy. Okay. Number 2, what is your biggest pet peeve right now when it comes to founders approaching you for funding? Think carefully, because how you answer may stop this from happening in your life. So you have the opportunity to stop something that you absolutely hate happening.
I want to take a crack at this.
Can you repeat that?
What's your biggest pet peeve? Your biggest annoyance when founders come to you and pitch?
Yeah. Again, I don't want to sound repetitive, but when people come, they think it's a cool idea. It's a quick way to make a buck or two. And that's sort of how I want to do it without having, again, I go back to him, but he does no insights about what he's building. Right? It's like he's just, okay, this is a nice wave. This is an AI wrapper call into ChatGPT. I'll give you, really, you need to come up, you really need to understand why you, why now, why this. A lot of whys he needs to answer, right? And you get a lot of those founders that kind of, okay, what's the flavor of the month? I guess there's less of them now, but you still come across those.
Yeah. And you can smell them from a mile away.
100%.
Yeah.
We had that actually a few times. That was,
just a painful conversation.
Yeah,
They're just throwing
I think we had
keywords out there.
We had a founder pitching its business, and then 2 months later coming up with like a completely different business, same person. So I agree.
And I can tell you something for Mika. So anyone approaching Mika specifically, right? If they don't get to the point fairly quickly, what they're trying to build, they're gonna lose him fairly quickly. That I can guarantee.
I can be impatient.
That I can guarantee. It's like people sometimes dance around too long before they get to sort of what's what.
You know why you're here. Just go for
Absolutely.
it. Ask for the ask and just see what happens. Got it. Beautiful. And so we end then on, thinking back on your trajectories, your careers, all of the entrepreneurs that you're currently backing and supporting, and all of the entrepreneurs out there that are listening to this going, this is what I want to do. What advice do you have for them? Either something that you've heard in your history that you're like, this has served me well, or just something that you're like, right now, I really want entrepreneurs to hear this.
Yeah, it's a good one. 2 things I heard many times and they stuck with me. One is the team you build is the company you build. I think this is very important.
Oh, yeah. Wow. The team you build is the company you build. Yeah.
And the second one is that, a lot of people, their main hurdle is what they think their ceiling is, right? And it's just, it's all in your head, right? And I think, you're not limited, but what you think you can build, right?
I love that. I'm a huge psychology, personal development buff, and it's all about limiting beliefs. It's all about how you can program your mind to think beyond the barriers you set for yourself.
No, so. I heard that from a great seed investor. I've learned a ton from him, and it stuck with me.
And so you see that as your role as well as an investor to kind of help these entrepreneurs break through.
Absolutely.
Yeah, they don't know what they
It
don't
applies
know.
to us as well, right?
Yeah.
We're the whole ecosystem is nascent now. So we're also, it's like, we're as a first institutional fund, right? So we're also growing, we're also learning, and the same for them. And I guess this just the entire ecosystem needs to come together and kind of to evolve.
Beautiful. Mika.
I feel like sometimes I heard this also, particularly at Stanford, I think it's one of the professors there that demonstrate, you tend to overestimate things in the short term and underestimate it in the long term. And we're very patient investors. We really want to see those.
That's not what Hisham said earlier.
Really?
No, okay. You're patient investors, just not patient people.
Right. Oh, sorry. Yes. I think we want. No. That's a different way to say it. I meant we want to see clearly articulated, very simple vision, clarity of vision. This is like very important for us. And so yes, when you dance around, it's not helping yourself.
I'm so giving you a hard time. Just joking.
But I mean, the idea of look, we are going to figure this out. And I think the best founders we've backed are actually very humble in that way. Sometimes when we go through the whys, Hisham said that there are many whys, right? And sometimes they're like, look, I don't have the answer, but I can guarantee you that together we're going to figure this out. And I think this, not overestimating the short term and like looking at the longer term and be like, look, I'm committed to build something in this
frame.
Exactly. I think that is something, and back to the resilience, I think that's something that is very important for us.
I love that. Hisham, Mika, it's been absolutely wonderful to have you on the show today. I'm sure a lot of entrepreneurs and I think potentially some aspiring, investors as well will find this conversation really insightful and hopefully nourishing.
Thank you, Erica.
Thank you so much for having us. It was a lovely discussion.
Thank you. Hey there. Thanks for joining this conversation. If you enjoyed that episode and you want to start researching potential investors for your startup's fundraising strategy, go to lucidityinsights.com and sign up now to the startup registration package by clicking the plans button on the top right corner. We look forward to having you join our future conversations and checking out our additional content. Until next time, stay hungry and stay humble.